Hello everyone and welcome to another weekly video here on Divergence University. My name is Jordan and today we're going to cover the week of actually the end of March and beginning of April, where the 2 months here are overlapping. So pretty much from the 29th up until the 2nd. As we can see, due to the end of many of the cycles, divergence entries could have the potential to be triggered exactly in those places. It's not like we don't have divergences during the rest of the time, right, when we're trading, but of course, the best and largest moves are coming at the end of these cycles or waves. And when this is combined with some other specific techniques, which we're going to talk about in this video, things really become interesting and you have the possibility to make plenty of money. So let's begin. I'm probably not going to cover all of them in depth. I'd rather cover 3, 4, 5 of them in details rather than going quickly over all of these examples here. But let's start from the bottom where we have oil. Now, I was just talking about oil, by the way, in another video for SRS Pro. So if you're interested in that, you can also check it out and find it in the channel of the club. But in oil, the situation is very simple. What we have here is a range, okay? And I say that many times in the past, and I'll continue saying it, but for some reason, people don't like ranges, where this is probably one of the easiest structures to identify. That could be horizontal range. Well, this is not really horizontal, but something like this. That could be kind of flag or channel, some call it, doesn't really matter. This is still a range. You lock the price in between these two boundaries. So when you have ranges, clear designated ranges by the market and by the price, it really becomes easy because then the risk reward ratios are absolutely fantastic. And if you develop yourself in a way that you're able to catch and identify these moves, the potential risk reward ratio here could be absolutely amazing. So this is pretty much where this trade is coming from. We have pushed down, the price started moving lower. I'm not going to go into the higher time frame details and analysis, but basically we got stuck in this consolidation. And now the price is coming closer to the top of this thing, creating this amazing bearish pattern and starting to push lower. So that's where the first attack is happening, okay? Unfortunately, the price would be pushing higher here, testing these highs, and if trading it, it might be kicking you out. There was another attempt, which is here on US oil. That's the crude. And you can see that the setup is still valid, right? Nothing really changed. That was the first divergence, okay? The price is pushing higher, breaking this high, and then we're going to the next high, but the price is still in the same zone. The price is still lacking the momentum to continue to the upside. So why not go ahead and give it another attempt, right? For me personally, those are the absolutely favorite types of entries which I'm looking for day in, day out. So second attempt on this one, this is also second false break. Let's quickly mark it right here. False break number 1, false break number 2, divergence, then you have divergence here. And that's basically the idea, right? So oil, that's pretty much what I have to say about this one. Let's see, QE dollar. Yeah, this is also interesting situation because here we're going to adopt for a second the structures which we're using, namely this one. So the price started moving lower, you have divergence against, and from that point on, you might be expecting pullbacks and then continuations lower. It really starts to make sense for this thing to continue lower once you see the entire picture. So what's the next on the list that you probably need to be checking when it comes to divergences? You need to be checking levels, okay? And on this specific chart, I can see many of them. So pretty much the price dropped, with a few tiny consolidations, and the lower we go, the more that people start cashing out, the less the bearish momentum is. And this is how you can see these tiny consolidations start to grow, become bigger and bigger and bigger until we start to get something like that. Up, down, up, down, up, down. And we get the divergence, which means the price is probably going to push up now. So this is how this wave developed. And once the push starts to the upside, which is what we at least assume to be a pullback, we might be looking for bearish continuation. And this is where we want to start identifying where exactly the strongest levels would be. And the way I see it, this is how we can structure it. So on a micro level here, we can go ahead and break down this entire zone into a few of the levels that we find. And this is where we want to be looking at potential sell opportunities. Divergence here on the histogram. And basically after this push up, the attack would be triggered right over here. So that's about QDOR. CADIAN is also kind of interesting, at least in my opinion, because here we can see amazing push to the upside and the price attempted to go lower, but this zone was never touched, was never broken. This is where the price stopped. We created the spikes first attempt, second attempt, and then the price started pushing higher, creating higher highs, higher lows, right? So even without any indicators, even without understanding divergences or whatsoever, you see that purely based on these levels, the price came to this zone and started pushing up. Now, the interesting part, as I said in the beginning, in my opinion, is right here, the lack of divergence on the MAs. And pretty much any pullback which might be happening afterwards, as we can see in this case with hidden divergence, could be treated as bullish opportunity. So if you have any other way to go ahead and validate trades, I'm not saying you can be doing that just by divergence on its own, you can include it here, okay? But the bottom line is you get the bigger picture. You know where the price is supposed to be going. So how exactly you're going to enter is not that important. So let's see what else do we have. We are looking at divergences in this video, so we're going to stick to that. First of all, we have a trend line, okay? We have bullish hidden divergence here. And I would personally be looking at these levels. Again, I'm going to break them down into smaller areas so you can understand and see exactly what I'm looking for, because many times you're just going to create a big box and that would be it, right? But it is really interesting to see what happens once all these levels start to fit together. So this is pretty much how it looks now. This level is kind of above, how do we delete here? All right, it's kind of above the place where the current market price is, right? And after this push, no divergence, hidden divergence in place, bouncing and testing these levels, okay? And what can we expect? Of course, we can expect the price to give us another push down. Another push up. And the logical kind of happens here, okay? But you can see that the actual entry is not really that important. It's important for you to understand where the price is probably going to go based on all the information that you have. And then it's just a little bit of training for yourself to find the best spots, best levels, and try to attack from one of these levels, right? So let's see what else we have. Cut franc. And this one is kind of easy because the pressure, the bearish pressure here started developing a long time ago. We had multiple false breaks. We had levels, weekly, daily levels. And the price kind of came to this zone where it was time to decide whether it's going to be breaking up or breaking down. We did break to the upside, but at that moment, this setup, at least in my opinion, makes a lot of sense because, I mean, look at it, all these divergences from pretty much every high, every two highs that you take in consideration, you can see bearish divergences. So this one we're going to check quickly. Let's do one or two more. Euro yen. Euro yen was kind of tricky, at least for myself in terms of count, but let's say that we had a level approximately right here. It's big, huge box, and this is kind of near the top of this box, okay? So the idea was mainly top of a range. Again, we're thinking about a range and the price is at the top. If you decide to go ahead and sell, this is the best place where you can be selling, because now, you know, if the price breaks above the zone, you don't want to be in that trade anymore. But if it bounces and it finds support to the bearish side, you have plenty of potential reward. Okay, so that's the main focus, at least for myself, on this one. And the other thing is that the yen, euro yen, didn't really start creating an impulsive structure right here. The way I'm reading this thing is like this. Okay, I had a few alternative counts on this one, but at that given stage, simply because we don't have anything at that moment, this could be easily interpreted as a double wave followed by bearish divergence. Again, I'm not going to go into the further details of how this had the potential to turn into an impulsive structure, and it kind of did afterwards, right? But it's important to look at the chart now up until this point, as it would be live, right? Because when you look at it backwards, it's very easy to say, okay, but that was this, and that's why you should have done sell or buy. It doesn't work this way. You need to learn how to make decisions when you're looking at it live, right? Otherwise, it doesn't count too much. So last one, because here we have also kind of interesting structure that I would be personally considering something like a range. And pretty much once the price comes closer to the top or the bottom, the idea would be to look for bounces. And once the price breaks, the idea would be to pretty much look for breakouts. So while the price is still inside these two boundaries, okay, the two lines, it definitely makes sense to look for buys. And this is where the bullish divergence would be coming in play. This is where we can have this kind of count, right? And we're looking for buys. And also, if you're looking at some other type of strategy, just for the sake of the example, okay, you may not be attacking with divergence here. You might be looking for the breakout of this high. You might be looking for the breakout of that trend line. You might be looking for 10 different types of entries, right? As long as you have a direction, as long as you have a context, it will make sense at the end of the day. So that would be all, ladies and gents. If you have any questions, leave us a comment below or find us in the Telegram group dedicated to the Divergence University, and either myself or Vlad will be there to answer these questions. Have a lovely week ahead. I'll see you in the next video. Bye for now.